QuickBooks Pro Plus Desktop 2022 OneNote presentation. Enter payroll for second month. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 8380, enter payroll for second month tab. Also take a look at the immersive reader tool, topic introductions in the text area too with the same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at a screenshot of the home page to start off with, focused in on the payroll section, employee section. Remembering you will only have access to this section if you have the payroll turned on, which is typically an add-on type of feature, although we are using the manual payroll here, which is perfect for practice, but not something you typically want to use in practice, given the fact that you would like to have the kind of internal control of the system kind of calculating the payroll taxes. Also, just realize that when you're setting up the payroll, make sure that you're getting advice from someone that you're not actually buying the payroll from, like a QuickBooks advisor or a payroll third-party payroll advisor, possibly a CPA firm, so that you can get your payroll set up in the best system for you, which might be turning on the payroll within QuickBooks, or it might be by having an external company like an ADP or Paychex help you out with the payroll. So now we're going to be looking at the trial balance, the accounts that will be affected when we process the payroll, typically the checking account going down. We've got the payroll expenses down below, which will be impacted, and then we'll have liability accounts that will be impacted as well for the payroll liabilities, and we'll also have payroll tax expense and payroll liabilities that will be impacted. We'll take a look in more details shortly. If you go to the edit dropdown and then to preferences, these are the preferences for the payroll. We turned on the manual payroll, which is something that's great for practice, but again, not something you typically want to use in practice because you'd like to have the internal controls of the system helping you to calculate the payroll, but this manual payroll is really nice to work with. So these are the items, these are the payroll items that have been set up that are going to help us to process the payroll. And this is the little widget. We're going to be now clicking on the pay employees from the home page. This is the process to do so. We got the pay period end, the check date. These do not necessarily have to be the same. And then we're going to be issuing our checks to our two employees down here, which we're going to have to add more detail to because we're using the manual payroll. So if we go down here, we got the $4,583.33 going to Adam. We're going to say federal withholding $720, $248.17 for the Social Security, Medicare $66.46 taken out of the check for the net check of the $3,548.70. If you had the payroll turned on, these would basically be populated automatically if you did the setup process correctly with payroll and entered the W-4 information properly. And then we've got the employer taxes over here, the $248.17 and the $66.46. So what's going to happen with regards to the journal entry behind this check, in essence, that's going to be issued a payroll check? The checking account's going to go down by the $3,548.70, and the payroll expense is going to go up by the full amount of the $4,583.33. The difference of these three amounts is going to go to some kind of liability account, and you're also going to have the employer taxes over here that are going to be increasing the payroll tax expense because we broke it out into a separate expense, and increase in the liability account for those amounts. And then Erica Smith, same thing, except different numbers. For our second employee, she earned $2,400. We took the federal withholdings, $360, $148.80, Social Security, $34.80 for the Medicare, for the net check of the $1,856.40. So there's going to be a decrease to the checking account for that net check, increase to the payroll expense of the $2,400, and then there's going to be an increase to the liabilities of this payroll withholding stuff. And then on the employer side, there's going to be an increase to the payroll tax expense and increase to the liability for that side. So now we're going to complete this thing, actually processing the check, continue, process the check. It gives you all this information that you typically have to give to the employee on both a current period and year to date. Notice you can start to think about one component of payroll and think it's fairly easy. But if you start to put all these components together, it gets quite complex. And one of the things you have to do is basically track each employee's information on a current period and a year to date and give that to them either with a pay stub or some kind of electronic form and provide that to them. If we go into the check register, Here are our two checks. They're going to be paycheck types, which we can see down here, but they're decreased in the checking account just like other types of checks. If we go into it, the top part looks like a check, but the bottom part looks different. We don't have the expense and items thing down here, but rather the paycheck summary thing, because it's a paycheck form, special check form, paycheck form. Transaction detail, here's our two checks coming out of the checking account. Those are the net checks that are coming out there. If we go to the trial balance, the checking account obviously decreased. The other side would be going to the expense account. And then, so here's the payroll expense account that is going to be impacted. And then we're going to have the payroll liabilities that will be impacted. And they're going to be impacted check by check. You can also think of them impacted in gross, in total. What's the total impact, as if in a similar way as having one employee. That's the way you can kind of visualize it. But if you're processing payroll within the system, it'll be impacted check by check, item by item. So then we can run the payroll summary report, which will break it out employee by employee and the total, giving us the gross pay. Again, you can think about it like what's the impact in total, the gross, like all your employees as if they were one, total withholdings, and then the employer taxes on down below. If you were to do this like on journal entries, or possibly you can imagine like a third party doing the payroll, then you can imagine a report like this that you might be receiving. And this would be a similar report that we have up top here. So we've got Adam gross pay, FIT, Social Security, Medicare. There's the net pay because it's the gross pay minus the stuff we took out. And then we got the gross pay for Erica, FIT, Social Security, Medicare we took out, net pay, and then the total. So if you took this and you entered it into your system, you could do it check by check, or you could do it just in terms of the total if you just want to get your financial statements to be correct and you have some external person like an ADP or Paychex processing the payroll. And so there you have the total. And then you've got the employer tax, Social Security, and Medicare that we're going to have to pay on top of what we're paying to the employees. So this is the employer tax and the FIT, Social Security, and Medicare total here. Now, again, this is just a simplified kind of form just to get an idea of this, because you could also have state taxes. You could have other compulsory or voluntary deductions or withholdings, like a 401k plan and a medical and whatnot. So then if you do the journal entry, then we're going to say, okay, let's do the journal entry down here. We're going to take this information, enter the journal entry, debit $4,580. That's the Hamilton's pay here. And then we're crediting the $3,549. That's the net check. The difference is going to be these three items, which is going to go to some kind of payroll liability. You could break out the payroll liability into multiple accounts, but we're just going to put them all into payroll liability. So the checking account's going down by the 3,544, same amount for February and year to date because these are balance sheet numbers. And then the payroll is going to be going up by the 1,034, same amount for February and year to date balance sheet numbers. And then the payroll expense, 4,583 going up by. This is different because it's an income statement number in that we started for February at 0 because we hadn't processed payroll yet, plus the 4,583 to 4,583 year-to-date numbers, 6,983, plus the 4,583 goes up to the 11,566. If we have the February numbers for the net income, we were at 5,008. We're going to go down by the 4,583 to 425. Year to date was at 12,436 net income, down by 4,583 to 7,853. Here's going to be our detail in terms of the GL. I won't go into that in detail because this is our first one. Second check. This is for Erica. The expense is 2,400, 2,400. The checking account's going down by the net check, 5,405 on the net check. Hold on a second. Net check is going down by the 1,856, I should say. And then the difference, the 544, is FIT, Social Security, Medicare withholdings that are going to be posted. Same accounts impacted here. And now we've got this impact on the payroll expense, including the two checks. So that's going to be the difference. Let's go down here and just look at what has happened with the GL. So we started at the 6,983. First check bringing us up to 11,566 on the payroll expense. Second one, 2,400, bringing us to 13,966. The payroll liability was 2,029. It went up by the 1,034 for the first check to 3,063. up by the 544 to 3,607 for the second check. And then the checking account was at 103,378 minus the 3,549 for the first check to 99,829 minus the 1,853 for the second check to 9,8973. Then we've got the employer portion, which we're not actually writing a check for, but are accruing upwards as we process the payroll, because we're basically paying payroll taxes on the employee's wages. So payroll expense or payroll tax expense is going to go up, and then a liability. So payroll tax expense goes up, the liability, I should say, goes up again, and then the payroll tax expense down here is going up. Another expense, so if you talk about the current month, it was at 0, it went up by the 474 to, went up by the 498 to the 498. Year to date was at 474, goes up by the 498 to 972 for the two payrolls that have been processed for January and February. Then the payroll tax expense goes up here, as we can see, and the payroll liability was at the 3607. So here it is, and then it went up by the 498 to 4105.